Hi guys, it's CryptoBirb agent speaking. Welcome to today's Friday webinar. Well, this has been quite a volatile, changey going throughout the week for many markets, including Bitcoin, including equities, including commodities, which are actually currently pushing forward to the upside due to high oil and gas prices. We're going to actually get a little bit deeper into the details, see into the charts, break it all down, see about the potential conclusions and scenarios you have to be ready for in terms of saving yourselves time and money. If you guys are ready, make sure you stay tuned. We are going there right in a second. First of all, let me know, guys, if you can hear me, if you can see me fine. Just as I always kind of like want to make sure and ensure the highest quality of the stream. Let me know how you guys are doing today. Beautiful weather up in Poland, but I had recently mentioned that I'm moving to Portugal in the nearest future. Beautiful places, beautiful countries, in the countrysides all across this very country, and of course, different taxation methods which are more crypto friendly. And I think this is definitely the direction that many countries are going to be incorporating in the near future for many basically states, many countries across the globe, because this is what the people really need right now in the especially uncertain times and the breaking world's economy, which is actually happening right now. So all that guys, said, I want to make sure that we're going to cover the most important and the most relevant pieces of information. And well, let me know, guys, again, where you're writing from, if it's actually safe, if it's good right now. Of course, there's a lot of risks and uncertainties, not only in the markets, but there's a lot of well, unpleasant things going on, just like we of course know for the Russian-Ukraine war and so many other places which are in danger, which is definitely not good to be looking at. So I hope you guys are staying safe. Mark your comments throughout the show. We will be able to deposit your questions. Leave the questions if you're watching that on YouTube. I'll leave the questions, comments, leave some comments so that I can actually refer to them. If you want me to answer some of them, I'll do my best to actually cover them as we go throughout the show. So if you guys are ready, I think it's pretty well, it's pretty, I should say senseful, full of sense, um, to go and kick it off immediately with a bunch of information checks, right? So to kick it off, let's check into the financial juice if there is anything happening other than today's actual, like, things in the calendar. So having a look, we see a lot of Australian retails, Chinese industrial points, Swedish retails, Eurozone, Italian Fed's Bullard speaks, okay, which actually already happened. And if we are actually right now, at the 19, which is 7 p.m. CET, which is right now, there is some US, oil, for the real rig counts for oil. So one way or another, well, need to know the market risk, right? We can tell that I currently believe the first rate move should come in July, with more to follow in the second half of the year. Bundesbank, okay? EU leans toward delaying the pipeline ban to get oil embargo deal. China's foreign minister Wang Yi, China has no information on a possible Xi Biden call. ECB's that cost the app will end at the start of Q3, which is quarter three, hike to follow shortly after, right? So there's some following up coming from the more European side. And well, how it is all going to translate, right? We know that the Fed and the United States, have been actually incorporating the interest rate hike cycle, the hiking cycle, for quite some time already, since the first hiking cycle, 0.25 basis points. 0.25%, 25 basis points, in the first FOMC meeting, actually conclusive in March. Then we got another rate hikes by 4.5%, 50 basis points, in May. And all those things concerned, we had recently got the proper release from the FOMC minutes. This last Wednesday, when the paper, the FOMC minutes, well, basically, discussing the reliability and the actual, I should say, decision, the unambiguous decision that there was, 0.5 rates actually hikes to be maintained throughout the next months. This is something somewhat informative. I do believe that if we are to dive into some deeper, market related issues regarding the charts, then we also have to kick it off naturally with the health check from the main industrial markets, right? So having a look in how the industrial Dow Jones Industrials actually is doing, you can tell it's actually following through to the upside for the first time in quite a while, right? You can tell there's recently been, in early May, there's been somewhat of an attempt of a breakthrough, to the upside. Yet there was enough of resistance from the medium term and the short term average that was actually resulting in no follow through eventually. But this time is a little bit different. You can tell the session is currently lasting just yet. And after a successful close through the short term mean, we're looking at a follow through toward like 33,000 points, for the industrials, which is somewhat positive, right? If we go ahead and dive and get the proper dive deep into the consumer discretionary, which is a little bit more defensive, just like staples, right? You see a lot of a V-shaped recovery kind of like setups going on, be it for the consumer staples, for the consumer discretionary, also trying to break above its short-term values, and of course heavily led by recovery by the energy sector, right? Due to the high oil prices and gas prices. This is all actually continuing to be the main case, of course, ensuring demand and then, well, I should say, mainly coming from the fears of shrinking supply, right? As we know, Russia is one of the main suppliers for the gas and for the oil, basically for the energy stocks and commodities, as you call that. So this definitely, when there is a supply fear of shortage, there usually comes a elevated demand. Whether or not it is a short-term effect, there is always an imbalance coming up from the fear side. So we also have a look at the financials, which are also recovering. Actually, wherever you look throughout all the sectors, all the stocks groups, industries, you're looking at the market in the green. Healthcare is actually pushing through. Industrial, like we said, basic materials actually pushing through. So far, I think it's quite the strongest, as it's leading over 200-day moving average. Technology is regaining somewhat of a strength as well, which is definitely good. Utilities also pushing after a decent breakout, of this ascending triangle or double bottom pattern, no matter how you call that. Regardless of the name for the pattern, whatever, it's way more important to see the actual breakthrough and follow through, right? Here, a clear double bottom pattern for the real estate, for the real estate ETF, right? Pushing also through. So there is a lot of bullishness across the equity markets, which is somewhat positive. If you have a look at the bond prices, then the 40-year bond prices are actually attempting to follow, to break, or should I say form this sort of like a head and shoulders inverse pattern with an attempt to break through its main resistance at 140, 142 points. Here for the yields, it is essentially combined with a little bit of a weakness, short-term weakness, some form of a descending triangle coming up on the 3.0% support. Even in the 10-year yields, T-notes, there is a potential head and shoulders pattern that could actually make these things inverse should there be a complete close for the week below 27, right? This is what I'm looking at. The main driver, the 50-day support coming from the 50-day average would actually be broken, right? So if that actually happens, there is high chance that we would see some follow through to the downside in the area of 22, accounting for the measured move. And and of course, the commodities, mainly driven by the oil prices, by the energy sector, just as it has for the CRB Commodity Research Bureau Index from Reuters. It's strongly driven, so you see a decent breakout. Gold has been actually, gaining a little bit of an upside movement there. Same as silver, right now approaching short-term moving average. If there is an actual follow through, there are chances we actually continue reversing or recovering towards 23, 24 area. This is also seen in the, let's say, in the copper end of a day contract, or in the ETF side, actual attempt to break through the short-term averages, which have been tumbling down. Cryptocurrencies have actually gone red for today, right? So there is this meme, going on for many people, calling it a proper decoupling, while nothing like that truly exists. I'd argue, right, because decoupling would mean that there is a complete detachment of one market from another, right, which means they go completely non-correlated. While this is potentially possible and likely as a temporary transitionary kind of like an effect, then I would say it's only dynamic and it only lasts a couple of moments rather than just lasts forever, right? So usually you see the correlation changing, and from strong correlation of Bitcoin to equities, right now you're seeing a little bit of a weakened correlation, which I'll actually show you in the charts in a second, as the market on the equity side is actually growing and turned on green. The cryptos are actually, it's a little bit weaker today, which is also seen in this negative correlation, a slightly more negative correlation than recently, but it's still in strong positive. Dollar has been very strong, of course, ever since 2022 started, but recently we've got the very first instance of a weakness, right? Right now it does seem to be attempting, it's a proper retest of a medium-term average at around 101 points, and if it actually just breaks, right, there is a higher chance for a deeper retracement, which could potentially bring the full risk on environment, right, as people would choose more returning and more promising returns from equities and from risk on assets rather than preserving their capital, protecting in dollar, right, which has been the case. The VIX and be it for the put and call ratio, you can tell that there is clear decline, and actually right below its 200-day average for the volatility index, for the implied volatility index of S&P 500's options, you can tell there is an actual pullback and retest, mean reversion towards its median 50-day mean. So all those things concerned, you can tell and conduct from the market that all of those things actually are leading into something of a change and shift in the markets, right? A lot of recovery in the markets that is actually very apparent in the equities market, which had not been appearing for quite some time, right? Because we only got to see increasing yields. We only got to see safe, rally to safety for the yields for dollar, of course, which had been, marvelously growing and very steadily, very strong upwards trend. And this seems to be a little bit of an edge of a reversal, right? We still need this one final pinch, this one final touch that would confirm all of that and actually just, literally, deny the disbelievers towards it. It would probably reverse the markets more and tilt it more towards the risk on side of the things, right? So how does it all correlate actually with the other markets, where, just like I said, we're looking at a somewhat of a follow through on the shorter term basis, for the Bloomberg Commodity Index, which is heavily weighted towards energy prices and the precious metals. So you can tell it's basically lagging behind the previous CRB commodity, CRB index, Commodity Research Bureau index from Reuters, basically because the other one is mainly driven by the energy prices, while here the weighting is somewhat similar to the precious metals, which are holding this entire index back. So there is not follow through to the upside just yet, but assuming there's more weighting on the CRB index toward the energy prices, I would argue that potential solution might be an actual follow through on the BCOM, which is lagging a little bit, held back by the precious metals, right? So far holding the support coming from the trend line conjunction of a trend line 50-day average and a proper volume profile, kind of like spike, where the biggest amount of the commodity index futures were exchanged basically in here, right? The biggest liquidations, biggest chunk of market history. And like I said, if we have a look at the actual comparison between the composite index and the large caps, then we are going to see and understand how it all translates to Bitcoin's situation and to Bitcoin's narrative in a brief moment, right? There is a proper attempt of a double bottom reversal pattern, which is actually potentially, seeming quite likely to me, right? Should you get a proper close at 12,000 points, just like you're looking at right now, we would not only get a proper breakout with a gap up, with a strong opening gap up, through as a sort of like, breakaway gap, breakout, if you will, very strong type of a breakout, coming through the 20-day average for the short-term trend, bringing significant reversal confirmation, potentially leading into the 50-day medium-term average, right, at around 13,000 points. If you get that, this is also confirmed by the measured move, so it makes a lot of sense to actually target the area. It is also coming in the pretty good conjunction and cluster of the previous areas of interest, support. Broken support turns into resistance, so it would make a lot of sense to actually retest this area eventually. And seeing this weakening dollar and weakening yields are actually the ones that are actually right now at the edge of dropping. There is a chance. It's not confirmed just yet. It's not confirmed, but should the weekly close in green for equities, for stocks, I would argue we would see a little bit of more follow through to the upside, potentially getting some relief stages for crypto as well, right? This is also even more apparent and stronger presence of this reversal vibes coming on the S&P 500 large caps, right? Just like I mentioned, there is definitely a lot of resistance, which is right now being tested technically, because the previous area of support at 4,200s, it was actually annihilated and breached successfully, then rejected with another area of 4,300s. So I would argue this is quite a tight zone, with lots of resistances ahead, not so much of a clean air, to slice through. It's just a lot of obstacles on the way. And even that it's broken right now for the short-term resistance, if it closes here, I would argue, it's still not confirmed well. I would want to see a close outside 4,200s. And then if it does it, so, it's still going to be meeting, 4,300 soon after, if that is the actual case, right? If some things, unpredictable things are going to happen, because in all honesty, no charts are going to tell you when there is like another war popping up, whether there is like another pandemic, coming with this monkeypox bullshit or whatever. So you just want to be cautious, and you want to keep this somewhere in the back of your head, that it's not going to give you the full future. The charts are never going to tell you the future. They're actually telling you the insights about the past performance, right? And there is certain predictive power more often than not from the past and derived into an actual pattern that appears in the price for the future, right? So you can, to some extent, extrapolate what's happened in the past, but this is uncertain. This is highly uncertain. So charts are not going to tell you when Elon Musk tweets about Dogecoin or Bitcoin. Charts are not going to tell you when Jay Powell or and the Fed are going to change their policy, or when there is another war, asteroid crash it into Earth, and so on and so forth. So you want to be aware of this definitely, and how it all translates to Bitcoin, right? How does it all translate to Bitcoin? This is the question, and I want to, guys, make sure that you understand it, that the most important point about understanding the correlation, which I'll cover in a second, is that it changes. It is dynamic. The markets are not stationary. The markets are not basically static, if you will, right? It's all dynamic. You cannot really press a pause and just apply, your knowledge in that very chart and instance. You have to understand that the dynamics of the markets, its own inherent chaos, its own inherent kind of like a feature that you cannot predict, this inherent chaos, makes it uncertain and improbable for you to assume that some things are going to continue forever like this, right? So just the fact that the market has been strongly correlated between Bitcoin and the equities recently doesn't mean it's going to stay like this forever, right? And because of the market entropy, actually there is a lot of uncertainty building toward it. And this is also, and somehow underwriting this overall, how I put it simply, principle of cycles. The markets moves in cycles, right? Everything in life basically moves in cycles, certain frequencies, and it's very important to understand that what you see in the chart, okay, just like you see here, there is a very big, I should say, aggregation of high highly correlated values, right? This is a 7-week 7-week correlation coefficient from Bitcoin, or measured between Bitcoin and S&P 500. And this basically tells you, okay, that Bitcoin has recently been very strongly correlated and positively correlated with equities, with the S&P 500. This has historically been a case, many times in the history, because like I said, the market oscillates and fluctuates, but it never remains the same forever, actually, right? Instead, you see this market more often than not, after some quite long time of aggregated kind of like correlation on the top, historically high correlation, you see the market is actually, seeming to be breaking down this correlation thing a little bit more, as like I said, the market in the crypto side is actually turning red. It's staying red while equities are pumping. There is a little bit of this detachment or deterioration on the side of the correlation, which eventually, in my opinion, can bring more good than bad, than harm for Bitcoin itself, right? So making sure we're on the same page. We are right now in this area of course, this very risky support. There's a lot of reasons to believe, that basically what we've seen so far is a form of a fake breakout, with a, this pin bar or a bullish hammer candle if you turn on the candlestick chart, right? So, and we know that the failed patterns, be it on the top, right, or be it on the bottom, the bull traps or the bear traps, they tend to perform better in the opposite direction than anticipated. So you can tell and argue, well, and anticipate to some extent, although remember, this is not necessarily, the bullish call you want to take. Everybody has their own different risk preference and profile. But just like we had it in the past, the fake outs tend to lead to stronger rallies in the opposite direction, stronger trends, right? So the fake breakout, on top, $65,000. We got right now 25, with a close of around 20,000, right? So this also marks a potential breakout, as the support got breached, but it actually did not get a proper confirmation for the close below, which made me sustain and maintain my previous opinion and then thesis towards which I trade actually for my long-term positions. The bear market is not yet confirmed. If it had closed below 28,800s, several weeks ago when the Luna crash happened, I would argue that the bear market thesis would make me switch to a little bit of more restrictive and reserved approach to my money management. But here, I'm still looking at this concept of a chart pattern, of a long chart pattern that continues trading ever since 2021, right? Getting us here and chopping around between consecutive high and lows without clear direction. However, you can tell that this 50-week average right now, it seems to be slowing down a little bit, right? It's not a very strong movement, but after a very strong upward trend apparent, for the entirety of 2020, and a huge acceleration on the 50-week basis, there's a little bit of a slowdown coming from the past 50 weeks, because this is what it actually represents. So I would not feel fully safe, and get my full side for the Bitcoin bulls for the long term until you get a proper signal of a breakout over $44,000 and a weekly close through it, right? Until then, there's a lot of like mean reverting plays potentially lining up here, because the fatter the market deviates against its average beat here, like be it here, be it here to the upside or here to the downside, then the stronger it deviates against its average, the higher the chances it's eventually going to improve or revert its prior direction. While this is not said, and this is not necessarily mean reverting, strategies are not going to get you like perfect tops or perfect bottoms, but they can spot some overstretched and overextended trends. And eventually, there is some reversal coming up, because we know that this has been quite a long time that Bitcoin has been stumbling, so much on the weekly time frame, bringing more and more, more and more bearish closes to the candles. So all those things concerned, even if we have a look very briefly through the short-term time periods, you're looking at this Barbicator Pro setup, kind of like with a trend-colored marks, where you're still not really seeing this reversal. First of all, this pattern of a descending triangle, it still needs to be confirmed with a proper breakout retest. And if such happens through $32,000, I would argue that this finally brings some relief and confirmation, just like the one you're looking at right now in the stock market, right? The stocks are already here. The Bitcoin is actually lagging behind and having quite some space below left to fill it in, right? And until that happens, the short term is actually a little bit of more uncertain, I would argue, right? This uncertainty coming from this pattern itself, this internal uncertainty, intrinsic uncertainty, combined with a lot of macroeconomic uncertainties. This is definitely not letting Bitcoin unfold well in a positive manner so fast, or as fast as you would have it. You would have had it basically in 2020. So I will get more certainty just based on a pattern. If we break through $32,000 and close a day or a week above, this would get enough confirmation probably to expect some $38,000 and $40,000 area kind of like retested. Otherwise, I want to see the main signal, which is 12-hour chart, my favorite time frame, even hiding the pattern. This current time frame trailer, which basically shows me the trend breakout threshold, right? Adjusted to the most recent peaks and swings in the market automatically. This is right now showing you the main resistance, the most important resistance at 31,264. So 31,250 is heading, you can approximate it to 31,300s just for the sake of the round number, which usually acts better from the psychological perspective. I would want to see a proper close outside this level, let's say 31,300s, 31,400s, 500s, and this would give me a proper valid signal of a breakout, right? Of a trend breakout. There is going to be some fundamental change on the demand supply balance, right, seen in the markets. As there would be a final breakout, that would potentially validate further reports increase. But regardless of the trend, it's not going to again give you like 100% certainty. In fact, the breakout method that I'm showing you right now is my personal trading system. And this personal trading system has a 30-40% win rate on average, okay? Which means that 6 to 7 times out of 10, it's going to be wrong. It's going to be fake breakout, but I'm then protecting my capital against heavy losses, waiting for a larger trend to develop, right? And if you're patient enough, you're actually watching a trend like this, right? Which lasted since $63,000 all the way up to here to $40,000, right? So it does make sense to get chopped a little bit, in waiting for a larger trend to develop to catch this so-called fat tail of the trend coming from the trend with abnormal length and run of positive days. So this is what I'm aiming, right? I'm not cashed on, I'm still cashed on my short-term positions, waiting for my trigger over 31,300s. And if I finally get it, I'm buying, high six, like big six-figure numbers of Bitcoin back. Accompanied by my long-term positions, which have not been quit just yet. So all those things concerned, guys, I definitely want to make sure that you're all doing well and safe. There is one final tip that I want to leave you all guys with. If you go to our website, theburbness.com, okay, you can get a straight, easy way to gain 7 days free of any charge premium membership, right? So we just press on sign up free there at the upper right corner, when you get the full educational materials, crypto, forex, commodities, stocks, indices, anything you want, any market, any interest is going to be covered with a 24/7 support from myself, from my team. If you guys want it, if you are serious about it and you need help free of charge for 7 days, okay, just go ahead and sign up free at theburbness.com. Go and sign up free, get us your email, get us your name, and you're going to be equipped and signed up free of any charge whatsoever. All those guys, things concerned, I hope you enjoyed that. If you did, make sure you hit the subscribe button, hit the notifications as well, hit the like button, hit the notifications bell so that you stay notified whenever we release the new issues. I see you guys on the next show. Stay safe. God bless you all, and bye-bye.